Exactly. So it's 1 to 2 reward to risk. That's what I want to keep. That is more favorably if I assume sort of like a 2%. Okay. So let's place these orders. We'll go back to the analysis, just make sure we are doing everything correctly. And now this is what it looks like. So this did well for us. Midcap didn't. Hi guys, this is Raghav from AlgoTest, and I just wanted to show you guys how I'm using the new Analyser that we've rolled out to put on some positional trades. Today is midcap expiry, and this week is special because midcap will now expire. The next weekly will expire on Friday instead of Monday, because Monday is a holiday for Holi. So the position that I usually put on is I'll sell a 30 delta iron condor, or rather I'll sell a 30 delta strangle. Let's do that. And then I'll also buy as a hedge the 5 delta or near the 5 delta strangle. So this shows me that my maximum acceptable loss is unlimited, but let me just buy the upper one as well. Okay, so my max loss is 20,000. I want to probably reduce that a little bit. Get this guy out of here, and then maybe on the put side as well, I'll adjust it slightly higher to tone down my max loss. Exactly. So it's 1 to 2 reward to risk. That's what I want to keep. That is my risk preference, and you can decide where you want to buy the wings based on your own risk preference. If you want to take more risk, you can buy wings further out as well. Now we just click on view position. So this is what our position looks like. We've sold a near 30 delta strangle, and we've bought a near in this case an 8 delta strangle to give us an iron condor position. You'll see that the term structure of volatility is kind of interesting. These three options are the implied volatility of these three options is very near each other. So it's kind of a flat term structure, which is interesting to see in midcap. Midcap is down 173 points today, 1.6%. Let's see, as a rough estimation, we can just multiply this daily percent change by 16, which is the square root of, which is close to the square root of 252 to annualize this volatility. So let's do this, times that by 16. So it's around a 27 vol, right? That's the move today. The move today, if you annualize it, it's around a 26.88 realized vol move. The core idea behind this trade is that the realized volatility over the life of the option will be less than the implied volatility at which I'm selling these options, right? So if I throw in an estimate that, okay, my realized volatility will be what it was based on today's move, so 26.88, I can actually come here to the Monte Carlo tool and put 26.8, can run some simulation, and it will show that, let's run it again, it will show that I'm kind of near break even, slight positive. I'll probably just cover my broker costs on average, right? If this is how midcap moves for the next 4 days, which is the life of the option that I'm selling. More favorably, if I assume sort of like a 2% edge in terms of volatility that I get, that hey, I'm selling a 27 vol and the realized volatility is going to be around 24.8, I run my simulation, then this gives me on average a higher PNL. But this is the bet that I'm making. This should be probably around 2 to 2.5 times the Vega that I'm short in this trade, in which you see, okay, so yeah, it's around 2.5 times the Vega, right? So the Vega of this option is short 340 rupees. And I'm quite comfortable putting this trade on. I'm not going to do any hedging during the week. I'm okay with accepting this variance in my PNL, assuming I'm right that realized volatility is lower than the implied volatility at which I'm selling. So let's actually put this trade on, right? So let's go to live trade. Let's call it midcap _ VRP. Let's go confirm. So my order window is out, and you can see that the bid asks are now being populated since I've logged into my broker. You can actually click these bids and asks to populate this text box here. So let's actually do that. I want to sell this, but I want to probably, let's say I want to sell it at broken 60.55. Let's try to do this mid-market 75. Let's also do this mid-market. So let's do 66. Okay. So let's place these orders. We'll go back to the analysis, just make sure we are doing everything correctly. And let's go. So my orders are placed. 3 of them are completed. The one that is not yet complete is this guy. Let's see if we get filled. If not, I might as well just convert this to market. My position as of right now looks like this. A message here that says you have some open orders. Payoff graph does not include open orders. Let's go back to the order window to check out our open order. Get it done. When you have to get something done, you have to pay up. And that's what we're doing. So this is what the position looks like. Let's take a look. I'm already down 300 rupees because I tried to be smart and I tried to execute my sell legs mid-market. So okay, so we put on this position. We let this position run. You know, we're not gonna make any adjustments to it over the next 4 days. Let's see what the realized volatility of mid-cap is going to be over the next 4 days. Let's see how much money we make, and we'll also see how much money we made as a result of the volatility and how much money we made as a result of the stock MIDCAP NIFTY, the index whipping around. So this is the analyzer, guys. You can essentially build your the orders in the market. We are integrated with 25 plus brokers. So any of the brokers that we are integrated with, you can just connect your broker API to our platform and then place orders. Signing off. Let's see how this trade does over the next few days.
4 days later.
Hi guys, so it is mid-cap expiry today. So this is what our position looked like, right? So we sold the 30 delta triangle and then we had bought the 5 delta triangle. So I don't want any expiry day volatility in my PNL, which is why what I'm going to do is I'm just going to close this position, and maybe on so Monday is a market holiday. Tuesday I'll put on another position in mid-cap. I'll essentially roll this position forward. So for now, let's square this off. Click on square off all. Let's test out this functionality. Let's select our broker. I guess we have to log into my IFL account. Let's do that. Now that we are successfully logged in, I can come here, refresh brokers, select IFL. I can just leave these, you know, I wouldn't want to remove this. I'll just buy out my short legs and I'll keep my long legs for now in case there's some weird move. So let's buy these back. Let's look at our position now. This is what it looks like. So this did well for us. Mid-cap didn't, like it stayed range bound, and that's what we wanted. There were a couple of aggressive moves up and down this week, but because it stayed within the range, we did okay in this trade. The reason I'm squaring off in the morning and not in the afternoon is because I just don't want that expiry day volatility. For that extra 1,000 rupees or so, right? I don't want to be in front of my screen looking at, what is mid-cap doing now? What is mid-cap doing now? What is mid-cap doing now, right? Let's take a look at some of our other positions. So the Fin Nifty position is, we are still between our strikes, between our short strikes, which is good because we were short deltas. We're still short deltas. We are holding this on until, I guess, Tuesday morning. Maybe, yeah, we'll keep it on until Tuesday morning. I want the weekend. I want to see what kind of weekend decay we get. So maybe we'll, yeah, I mean, it's a 3-day weekend. So there should be some decay over the weekend. The maximum profit I can make at this stage is 5K. I'm at 2,700. Maybe another 2,000 rupees would be nice in terms of decay over the weekend, but I'm not really sure. So I'll reevaluate today at the end of the day.